Hello and welcome to Rock Your Block. I'm your host, Tia Young. We have a real treat for you today. We want you to welcome to Rock Your Block our returning guest, Ernestine J. Wilson, Master Realtor, broker, and owner of Ernestine J. Wilson Real Estate, LLC, located in Largo, Maryland, and doing business throughout the DMV metropolitan area. Ernestine, thank you so much for coming back for part two.
You tricked me, but I'm here.
You're here. Well, I'm so glad that you are. And we want to get started because we have a lot to cover. In the first segment, we were to talk about sellers, real estate transactions for sellers and purchasers, but we got so involved in sellers, we didn't talk very much about purchasers. So today, we're going to focus a little bit more on the purchaser. But before we do that, I want to know, and I'm sure our audience wants to know too, how you got started in real estate, because you and I, we've known each other a long time. We went to high school together. We went to college, and same college. I never heard you say anything at all about real estate, and here you are, a real estate broker. So tell us how you got there.
Real estate wasn't on the radar. It was. Actually, the way I got into real estate was kind of like an experiment. I was working at an insurance company. And it was a bad experience.
Oh.
I started doing really well. We had, it was a national chain, and they had lots of clients, and we were assigned a group of people to, at that time, we had to go collect their insurance premiums. Oh. So every month I had the same group of people that I had to go and get their funds. But while I was there, my job was to sell them some more insurance and to get referrals so that, of course, I could sell the referrals insurance. Yeah. And the way we got paid was we earned a percentage of the premiums that these people paid every month. So the objective was to sell as much as you could to get your income as high as possible. So this was a book that I guess wasn't performing. And so I started doing really well. And I came to work one day and the manager said, "We're going to give your book to someone else, someone who needs this money more than you do, because he has a big family." That he said,
"This is unreal."
He said, "You can take another area of Arlington. This probably isn't the best fit for you anyway." And so I quit. And when I quit, I decided I'm going to stay in sales, but I need to be in a profession where when I make the money, nobody can take it from me.
Yeah.
And so real estate seemed to be a good fit for that, and fortunately it was.
Oh, that's wonderful. But that's a like you said, that's a bad story. I'm hoping that things have changed with that particular market, But anyway, wow. Yeah. I just remembered as I was putting everything together, I don't ever remember Ernestine talking about real estate, and that's what made me. So thank you for that. Now, the last time we were here, we were together, the things have really changed since that time. And now all I'm hearing is about interest rates that are going up. And, some people are saying, that purchasers should not give up on their dreams. They should still go out there. And then I'm hearing other people, you better hold your money. You better wait a while because we don't know what is going to happen with our economy. There's so much going on with the inflation and the gas, and I mean, you name it. You can take up your 10 fingers and you can find something going on, with all 10 of them. So what do you say about that? What is the real deal on those interest rates and purchasing personal property or property for your business?
Well, I don't have a crystal ball. I think I told you that last time.
Yeah, no, I know.
But I do follow advice of two people who are very well known in the industry. One is Lawrence Yoon. He is the CFO of the National Association of Realtors. And the other one is Brian Buffini, and he runs the largest real estate coaching organization in the country. And both of them believe that the market will continue escalating, but not at the pace that we were experiencing last year.
Okay.
So the thing to remember is that people are thinking about what happened in 2006, 7, 8, 9, 10.
Yes.
But the market is totally different now than it was then. Because back then, people were getting loans that they really shouldn't have been getting. They were given loan products that changed their monthly payment. And so when the payments went up, people couldn't afford the payments. And then they found out that they owed more money than their houses were worth. And so when that happened, a lot of people just abandoned everything. They abandoned their homes, they abandoned the loans, and that's why we had lots of foreclosures and lots of short sales. The situation is not like that now.
Right.
Recently, lenders have been requiring down payments. You have to prove that you actually have a job. Whereas back then,
You didn't have to.
all you have to do was say that you work somewhere and sign your name and you could get a house.
So proving means that they're calling your job to make sure you really work
Oh,
there?
they verify everything.
They verify.
Even up until the day before closing, they can do that.
Wow.
So loans are a lot more stable now. They're a better investment. So not as many people will be in trouble.
Okay.
And in addition to that, 80% of the people who own homes in America today have equity. So if a person got in trouble, all they'd have to do is sell their home and they could go to closing and walk away with money. So the situation's totally different, and people shouldn't be as concerned, I believe, and they believe, about being underwater in a couple of years, because
Well, right now, today, what are the average interest rates for, or does that fluctuate?
So right now, just below 6%.
Okay. That's not bad. I had a person to ask me this question. I don't know why they asked. Maybe they had seen our first show. I don't know, but they thought that I would know the answer, and I did know the answer. They were saying, well, Tia, with the way things are going, I'm thinking about maybe I shouldn't purchase now. I should try to find a seller who is willing to allow me to rent the house, you know, and have an option to purchase it in 1 year or 2 years. At least that would give me time to see what the interest rates are. I mean, the whole focus of this person was the fear of interest rates being high. I didn't know what to tell him. I mean, it sounded like something that would be good, but I don't even know if that's still something that's being done. I know at one time there were people that were renting their house out for, you know, a year or two and taking part of the payment and putting it as part of a down payment. Is that still something that's being done, or is that advisable?
It's not happening.
It's not happening.
No, because with the way the market is right now, and especially recently with properties escalating like over 20% in some areas in 1 year, why should a person do that? Why should you guess about the value of what your house is going to be, let someone rent it for 2 years? Financially, it just doesn't make sense.
On the part of
I
the
have not
seller.
seen that in 10, 15 years.
Really?
Rent with the option to buy.
Okay. Well, they still have, according to this person, that he was getting emails, and maybe they were scammers that were making that offer, saying that, you know, we have homes that are available to rent with the option to buy, and that part of your rent will go towards the purchase or down payment of the house.
I have heard about some people that have gone to jail for
Okay, so the
offering,
scamming is
yeah.
out there. Yeah, okay, all right, that's good. So last month we spent a lot of time talking about on the seller side. Purchasers, what should purchasers expect? What are the things that they should be thinking about prior to even calling up a real estate broker or agent? Are there things that they should be doing prior to calling up the professional to help them?
Well, I personally think that it's better to call the professional when they start thinking about it.
Oh, okay. And why do you recommend that?
Well, because some people think that they have credit issues and they don't.
Oh.
Or they go to one of these credit repair places that charges them money and it doesn't really work out because they're given bad advice sometimes. They're told to dispute certain credits that show up on their report, and lenders don't like that. Loan officers do not want to see disputes on your credit reports. So it's for reasons like that. Sometimes the accounts are so old that they won't count against them, so there's no sense in even bothering with them, because all that does is it triggers that company to start reporting that person again, which then makes it a bad debt, and then it counts against them. So they need to speak to a professional right away so that they can make sure that they're following the right systems to get approved.
You brought up an important point about credit, because that is something that's very important. What are some of the specific things that purchasers need to know about credit? Because some people, I want to buy a house, but my credit is only 650, and I've been hearing that your credit has to be between 700 and I guess 800. I don't know. It used to be 800 was the highest that you could have. Maybe it's gone up now.
Yeah, it has.
But it has gone up from 8. So what are some of the things that people need to know about their credit, even maybe before they call you, so that when they call you, that's already worked out. That they know that they can qualify. They're not spending a lot of time trying to backtrack, on credit.
Well, again, I'm saying, call me right away.
Because you still advocate that they should call you as soon as they start thinking about
because
it. Okay.
I can make sure that they don't go down the wrong path.
Okay.
Because I can direct them to a good mortgage loan officer, depending on what type of loan product I think they need. Look at the money that they have for a down payment, ask questions about the bills that they have, how much they owe, look at their income, and I can pretty well figure, based on the debt to income, the purchase price. But I don't do that, but I know enough about it so that I can refer them to the right person to help.
What are the average credit scores that most lenders are looking at?
Well, there isn't really an average. It depends on what type loan you want. So you can get an FHA loan with a score as low as it was at 620. I'm sure it's 640. You can get an FHA loan.
620 or 640? 620?
I believe 620.
It's 620. Okay, now, and talk a little bit about FHA. What is that?
Federal Housing
Authority.
Administration.
Okay.
It's a HUD loan.
It's a HUD loan, okay. So that's a government loan.
It's government backed.
Government backed, okay. And what does that mean, government backed?
It means that the government guarantees the loan. A long time ago, most people paid cash for houses, or they made a 20% down payment. So in order for more people to be able to purchase houses, the government devised this program where for a small amount of money down, right now is 3.5%, a person can purchase a house. And what the government does, what HUD does, is HUD guarantees to the investors that 20% down that a person normally would have had for like a conventional loan, HUD guarantees that the investor will not lose that money.
Oh, okay.
If that makes sense.
Yeah. Okay, so there's FHA loan, there is what?
There are conventional loans.
Okay, and explain that. What?
They are loans that are not FHA or VA or they're just regular loans that the difference between an FHA loan and a conventional loan is FHA has an added expense called a mortgage insurance premium, and that's actually the insurance that guarantees that 20% to the investor.
Okay.
So, and with an FHA loan, a person can have a higher debt to income ratio than they normally do with a conventional loan. So FHA is consumer friendly, especially if you have a lower credit score, more debt, and a small amount of money down.
So that and then of course the VA loans,
those
are popular, right? Are there special things that veterans have to have special paperwork? Do they have to prove that they have been in the military?
They do.
Does this loan also go for those who've been like in what is it? When people are in the military, but it's like a state military. It's not. I guess it's not VA. It's like they're in a guard, military, state guard. That's not the same, is it?
I'm not, excuse me, I'm not sure.
Okay.
But what I can tell you about something kind of new for veterans, disabled veterans in Maryland now can get up to a 50% real estate tax credit.
Really?
Yes. So that their real estate taxes would be half what mine would be.
Wow.
So that's a good benefit.
Yeah, that is a good benefit. I didn't know that. That's a real good benefit. Okay, so there, it sounds like there are all kinds of, there's more than one or two types of ways that you can qualify for
there are.
A loan, which is really good, because back in the day, I remember when I bought my first house years ago, there weren't a lot of choices that you had, you know, as I recall. So that is, are there any others or anything special for women? No, we gotta wait a little while. Single moms, that's what I really meant, was like single moms.
There are first-time home buyer programs in Maryland, DC, and Virginia. Not so many in Virginia. More in Maryland and DC. And there are different qualifications. Some of them are income driven, number of people in the family versus the salary of the household. There's so many different requirements that I won't even try to discuss them. I don't even know them all.
Right.
But there are a lot of programs available, a lot of down payment assistance programs. So it doesn't make sense for anyone not to try to buy. Well,
I was just thinking of something right now. Let's role play a little bit. I'm going to pretend that I am a person who's thinking about buying a house, and I'm going to call you up, and I want to see what you're going to tell me. Okay, I'm going to start right now. We don't have a lot of time, but we're going to take it as far as we can take it. Okay, ring-a-ling, ring-a-ling, ring-a-ling. You got to say hello. You got to answer the phone.
Yeah. Hi.
Hi. I'm Tia Young, and I was referred to you by John Doe, and I'm thinking about buying a house. I'm a single mom. I have 2 children. I have a job, but I don't know how much I can afford. Right now, I'm paying $1,500 a month for for rent, and we only have a 2-bedroom apartment. So I don't know, can you tell me what I need, or my credit scores? I don't know what they are, but they're probably like 650, maybe 660. Can you help me?
I'll see. The way that I work is I schedule an initial consultation by Zoom or person to person, and we talk about where you want to live and what you want it to look like. So once we discuss that, we talk about your finances, what your expectations are for a monthly payment, and I look at your debts, your income, and next we decide which lender is a good fit for you. Or I refer you to two or three lenders so that you can decide which one you would like to work with. And so you talk to the lender, and the lender...
Are you with me when I talk to the lender, or that's something I do by myself?
I'm there if you need for me to be, but most likely you don't.
You don't, okay.
Because that's the lender's profession, and I'm going to help you find the house and navigate through the transaction.
Okay.
But lending rules and regulations change daily. So that person is the one who will advise you on what to do next.
Right.
So the lender will let us know how soon you can purchase, if you can purchase now, or if you need to wait because there's some things that need to be straightened up on your credit report.
Okay. So the takeaway is, to me, and you correct me if I'm wrong, is that there is no reason for people to panic because of a lot of the things that they're hearing in the media about, maybe this is not the right time to purchase because the interest rates are going to go sky high. The best thing that they can do is to get in contact with a broker or a real estate agent and just kind of share their heart with what it is that they want to do. And then you or a person in your profession will navigate them through, through the entire process.
That's correct.
Okay, that's
good.
The
best thing to do.
That's good. Well, I mean, just us talking here, I mean, there are tons of things that you have said that is different from what I thought. So I'm learning too as we go along. Now, the other thing that I'm excited about, we only have about 3 minutes, but you are going to be coming on as a host of Homes Radio. Yay! And so can you tell our viewing audience what they can expect about your segment, Homes Radio?
Well, it's going to be exciting. We'll invite interesting people in to give information about a lot of different subjects. One that I'm really excited about is one of my clients is a nationally known event planner.
Whoa.
And so you know how I love parties?
Yes.
So I'm going to ask him to share with people, I think I'll have him in October, and ask him to share with people how to plan a fabulous holiday party.
Oh, okay, I like that.
Yeah.
What about, would you have maybe some of the people that, single moms, and even if they're not, just families, come on and talk about their experience?
Actually, that's on my list.
It is? Okay, good. Yeah.
But people are so concerned about money nowadays.
Yeah, they are.
I think I'll start with the finance person because people need to know what the market is expected to look like. They need to know what the projections are for their home values and things like that. So,
okay. And this is something that I've wanted. I think Homes Radio, that's a unique title. What is that? Does that have a meaning, a special meaning for you?
Well, it has a meaning for James, my husband.
Oh, okay. That's right, because James started out with Homes Radio.
Yes, so he developed some domains. He sold some of them, but Homes Radio was one of the ones that he kept. And so when we opened the real estate company, we thought it would be a good name for our website. And it's short and easy to remember.
Right, right.
So.
And I know James has been busy. He's an attorney now, so he's doing other things and all, but will he sometimes come on the show and probably critique you and me?
I don't know whether or not I'll let him on the show.
You don't know whether you'll let him on the show or not. I know.
Jury's out on that.
Yeah, we give credit where credit is due. He did start out and for several years did Homes Radio, which I always enjoyed that.
Oh,
well,
yeah, he did it on the radio.
Yeah, but he did it. He did it as a
host.
Yeah,
Oh,
he sure did. He sure did here.
That's right.
So we have about 51 minutes left in the show.
Seconds.
Can you quickly just sum up just the one takeaway about purchases and them not being afraid to just jump out there in the green grass and go for it?
Well, almost 70% of the people in this country own a house.
Yeah.
And that's a pretty high percentage. So if those people could do it, you can too.
Right, right. That's good.
Just might as well try.
Just try. Yeah, just go for it.
Right.
Ernestine, thank you so much. And I'm excited about Homes Radio.
Okay.
Well, our time is up, and we want to thank Ernestine J. Wilson for sharing with us today how to manage a successful real estate transaction, Part 2. If you have any questions about how to contact our special guests and also about her new segment, Homes Radio, please see the information scrolling below. Thank you for watching Rock Your Block, and we'll see you next week. Bye-bye.